times we had. I see it now, I see it now. Real love, now I break through to show to you that I'm more good than I am bad. I work it out, I work it out. And I'll be somewhere that you need me, and I'll be holding my breath, waiting for you to show.
Watching the ocean with you, baby, up with a slow motion crew. And we up in our cloudlands when people change, but not us. And we just chillin', kicking it, kissed by the sun. Could be soaked to the skin in the mall soon. I know she got the good vibes when seasons change, but we're the same. Even if I lost all my money, the zero runs deep, honey. And I don't need to speak a single word, 'cause you got me holding, holding. Even if my jokes aren't funny, my tongue tied up on it. And I don't need to speak a single word, 'cause you got me holding, holding. 'Cause you got me holding, holding. And I'll be running, possessed by a low, low voodoo. Fired up like a wolf on a full moon. And we're stuck in a la la land. The tides will turn without us. And I'll be killing time like I might be a cartoon. Take it in real life like haiku. I know we got the good vibes when pieces fall right into place. Even if I lost all my money, the zero runs deep, honey. And I don't need to speak a single word, 'cause you got me holding, holding. Even if my jokes aren't funny, my tongue tied up on it. And I don't need to speak a single word, 'cause you got me holding, holding. 'Cause you got me holding, holding. Cause you got me holding. Play me like a bass guitar. See Come Jimmy at Woodstock. And drive me around in your red Ford. Shivers down my spinal cord. Oh. 'Cause you got me holding. Even if I lost all my money, the zero runs deep, honey. And I don't need to speak a single word.
What's up, guys? What's going on? It is 12:06 p.m. Good afternoon, everybody. Good morning, good evening, and good night to some of you, I'm sure. Cool. Got a few people in here already. Welcome to Crypto and Coffee. My name is Cantorin Clark. On behalf of my partner, Josh Rager, I just want to thank you guys for tuning in to the BlockRoots live stream series. So we were originally doing these at 9 o'clock in the morning, Eastern Standard Time. That would be my time, New York time. And I didn't enjoy being on the stream during market open. New York Open's a good time period to be, right after New York Open is a good time to be in the market. And we needed to reschedule that because it was getting in the way of my actual trading. So good morning to everybody. We have a few people in here that I am familiar with. So it's like, we have Crypto and Coffee. It's your afternoon cup of coffee. It's more like crypto, lunch, and coffee. For those of you that are new to the platform, new to the YouTube, if you're not already a subscriber, go ahead and click the subscribe button. I feel like I'm getting good at this script, right? This is off of rote memory, but I feel like I'm getting it down finally. We try to keep it casual here. We're not going to inundate you with all this shit in the beginning, but we're looking to build our YouTube presence. And as I always say, right down here on the left side, or it's on my left shoulder, but because of the video, it's probably looking like, I think that comes up as my left. Yeah, it's not mirrored. You'll see the subscribe button. There should be a little watermark down there. Yeah, crazy hair day today, so I went with the hat. My hair is getting ridiculously long, and I don't have any intention of cutting it. I'm going for, your 70s to 80s baseball player look. So I might even rock the mustache at some point and the long hair. All right, so we got a few people in here. Good morning, everybody. Math, hi. Cornholio, glad to have you. Jack D, D Ross, Saab, Pascal, Sweet Canary, Kilgore, Frog La Frog. Okay. Ola Kanori. Hopefully I pronounced that correctly. Jake, what's going on? Luna XBT. Keld, how you doing, buddy? Lukey Big Knife. All right, Lukey Big Knife. I like knives, Lukey. Okay, let's see. The biggest knife I have, I think, is my Gerber. I think that might be the biggest. No, I have a K-Bar, which is a little bit bigger than that. But yeah. All right. Baden, Jan, what's going on? Captain Youth. So what's up? All right, what's going on, Captain Youth? Yeah, Randall, tell them, man. Smash the like button. There's a reason why crazy YouTubers say smash the like button. And we know that I have a point of contention with a lot of YouTubers. That's why we're trying to really to grow in the space. I'm not talking about my peers that are coming off of Twitter and are on YouTube. I happen to like a lot of the Twitter folk that are on YouTube now as well. But I think you guys are familiar with who I'm talking about when I'm sort of talking in this umbrella term about all the YouTubers that are just kind of ridiculous. And one of them is the smash the like button guy, who originally was behind that. That was, I think, Supoman. So I don't even know the names of some of these ridiculous characters that are on YouTube. But yeah, go ahead and smash the like button, because again, what that does is it helps us get put front and center and prioritized by the YouTube algo. So we appreciate that, because again, we're not trying to get involved in this. We're not doing this without the intention of trying to grow, right? That is our plan. We want to be helpful, but we also want to grow. So go ahead and smash the like button and click subscribe if you have not already. And about that, we do a lot of giveaways. So as you can see on Xbox, you can take whichever one you want. I was thinking at first, I'll give away an Xbox, and I don't have a PS5. I have an Xbox, and I figure what the hell. Sometimes I kill time by playing Call of Duty. I started doing that again during the pandemic. No shame whatsoever. I really enjoy just bowling people over in Warzone. So I spend a little bit of my time doing that, and me and my brother run the maps. So, and I'm just talking shit, obviously. But yeah, I was thinking, give away an Xbox. And then I'm thinking, people don't really care for Xbox. Some people care for PS5, right? Not that people don't, but everyone has their own system. And then, hell, maybe someone doesn't even want either of those and they just want the BTC equivalent. So, yeah. Okay, so we're going to do the giveaway from the last stream where I said that we'd be giving away $200 in BTC. So we'll pick 2 winners from the last stream. The only requirement is no criteria whatsoever. You could have left a comment with a period. The only requirement is that you left a comment. So we're going to add those to a random comment drawing. It's just a website that does that for us, and we'll announce that at the end. And then Josh and I have also, you can see Josh just posted it, I reshared it, decided we're going to give away another $200, and we'll be updating you as to when we go about doing that. So good morning, everybody. I think that covers most of you who are in here. The concurrent viewer to like ratio right now is about 2 to 1, so we're going to need to bring that closer to parity, or 1 to 1 parity. You're playing the new Call of Duty as you listen to this. Nice, man. They're always messing around with my meta, but I'm a big I use the so yes, of course, I like to shoot people on Call of Duty as well. I'm using the Kilo MP5, or I'll use the Kilo with the HDR. That's how I roll. All right. So, and as I've said before, for anyone who makes fun of people who play video games, there are a few trading desks. Okay, one of them specifically I could think of in NYC that one of their questions for their interviews is, do you play video games? Okay. And what they find, I guess, is that people who excel at video games are the type of people, or that those skills are transferable to trading. And, we don't have to get into what those skills are. I think it's kind of obvious. The parallels being able to, sit in front of something all day, master a game, and to a large degree, trading is a game. It is an infinite game. It is the best game there is, and that's why I still actively trade as much as I do, is because I really enjoy the game. I really enjoy the thrill of recognizing that someone is on the wrong side and immediately getting on the opposite side of them, and taking advantage of those periods where there is that little hint of alpha that stands out. And in that case, it is a game because I'm trading against someone else. So there's a lot of other factors that make it similar to a game, though. But yeah, video games I give a thumbs up to video games. All right, so Fal Uzi combo, nice. All right, MP5 is a go-to. Yeah, it is. Yeah, it is. They keep switching stuff up. It used to be the Grau MP5. All right, so guys, how is everybody doing? In this stream, we're just going to touch on a few things that are, what I think are pertinent and important to point out, and then I'm going to take your charts, and I'm going to take your questions, and that's that, right? We try to keep this casual. I want these to have ultimately more direction. I want to start doing these more frequently than, I'm just turning my phone on silent, more frequently than 3 days a week. I want to try to do streams 5 days a week, and have it where 2 days out of the 3 are maybe more just kind of classroom oriented. Maybe one of the days is pure just me trading, and that's really it. I'm trying to figure out a way to do that where I just leave the stream on. It's not like I have to figure out a way to do it. I'm trying to figure out something. We're trying to constantly figure out things that are different and that could be beneficial to anyone who is right now trying to learn how to play within this market. And we're not trying to sell you on anything. We barely talk about BlockRoots. You guys are familiar with the platform that we offer. We barely talk about that. We're non-sensational at all, and that's, I think, one of the things that we are. We make sure that even the things that I'm confident in, I am really hesitant to get too loud on the loudspeaker about them, because I don't want anyone to get burned. And chances are that if I'm confident in something, I already have a really good position on it. And if I say that I'm very confident about something, and someone else is getting in on behalf of that, well, chances are that they're getting in later than I am, and that turn that I might expect and have a nice cushion for is not something that they might necessarily expect or have the same amount of cushion. they don't have the same amount of room to let the trade run against them. And you can imagine that people get burned a lot by people who are sensational. So it's the last thing that we want to do. All right, Pascal, Johnny. All right, cool. Let's rock and roll, guys. All right. So a few things I want to talk about. This guy first, okay? You see this guy's face. You see him talk about Bitcoin. All right? You de-risk your positions. Okay? I'm not joking. All right? You consider de-risking or maybe reevaluating the situation, okay? Unless you are comfortably in position, all right? Unless you are sitting at a very nice cost basis. You do not, I'm not giving you financial advice, but what I am saying is that this guy is the death knell for Bitcoin's short-term trend. Okay, his name is Brian Kelly. Okay, he is the death knell. He's the canary in the coal mine for the turn. All right, so when he starts talking about Bitcoin, he is like the last person for some reason to get on board with talking about it publicly. And for some reason, he is the best counter trade person that CNBC has. So much so that if you are to get a copy of this book, all right, which I gave away 10 copies of this. It was a pain in the ass because what I ended up needing to do, because no one wants to give their address, so I can't send them a physical copy, I decided I was going to use Kindle, all right. 8 out of the 10 people that won, okay, they didn't want, everyone wanted, but won, were outside the United States. And in the United States, you could gift people Kindles, but you can't gift people a Kindle outside the United States, which is absolutely, ridiculous. I have no idea why that is the case. We figured it out either way. I ended up setting the Bitcoin equivalent for the price of the book. Regardless, this book is Unknown Market Wizards. All right, so if you're not familiar with Jack Schwager, he has a series of these books. Very well-known trading author. Okay, trader himself, obviously. But Market Wizards is one of the most popular series that you could hopefully at some point have read some of his books, right? Whether it's Market Wizards 1 or Hedge Fund Market Wizards, or there's a few of the books that he's put out. I think he's put out other books as well. But this is Unknown Market Wizards. Okay, so this is dedicated to guys who are not front and center, not famous traders, people you might not necessarily be familiar with, except for the fact that Peter Brandt was the first person in this book, first chapter. But he talks about there's a guy in this book. I don't know if it's Neto or I forget the name. One of the chapters. Read the book. It's a quick read. I think I read it in 2.5 days. I call those books airplane books because you could read them on a flight. But there's a character in here because I think they're all pretty much. I think they are going under pseudonyms, right? They're not identifying themselves. But Jack has done the due diligence of making sure that their broker statements back up what they're saying. But the character talks about how Brian Kelly, he has back tested, okay, statistically backed this up, all right, going back who knows how far historically, but over, I think it was like a 5 or 10 year period, it might have been even a decade, right, 10-year period, that Brian Kelly is the best counter trade on CNBC. All right, so if he is in a position, okay, so say he's in, he's long for, Pfizer's new, right? Pfizer's not new, but it's popular as of recently because of the vaccine. Pfizer, big drug company. It's everyone's familiar with Pfizer either way, so pharmaceuticals. But if Brian Kelly was to come out publicly and say, I think that Pfizer is a buy here, that absolutely is more often than not. Again, that is the death knell for that position in the short term. So Brian Kelly has managed to get bullish at tops. So to make this simple, Brian Kelly has managed to get bullish at more tops than anyone else. And this guy has backed it up with statistical evidence, right? So he's backed it up with data. Okay, so there's really no refuting that. And for all of us that have been in crypto for myself now going on 4 years, I will tell you that every time that Brian Kelly came out and got confident, the trend changed in the short term. And not to say that there's anything wrong with the guy, but I definitely wouldn't want him to manage my money, and I think that's what he does. So BK does call local tops. And, Brian Kelly just came out, breaks down Bitcoin's best start to the year since 2012. Okay. I don't think that, the guy is, I I don't think that he's helping any kind of, he's, serving as a liquidity provider, and that he's coming out to get bullish, and that this means that, that there are actual people that are selling based on, well, first of all, I've got to clarify that. There are people selling based on him saying these things because they've looked at him now as the death knell for the trend. But I don't think that it's his intention whatsoever, right? I don't think he's saying, this is Bitcoin's best start, and he says these things at the highs because he's getting out of position. I just think the guy has a terrible hit rate, and we'll make fun of him indefinitely. But so anytime that he says anything, I almost immediately start reconsidering any kind of risk that I currently have on, and that is with regards to short-term positions. So just de-risking short-term positions, that's how I roll. And short-term position means if I'm in any kind of shorter-term trades that are maybe just mechanical trade setups that are not necessarily, they're not important to keep on either way. If I'm looking at scalping a very tight range, and for example, he comes out and he says something and we're already close to resistance, it's just confluence for me to get the hell out of that trade, right? If at the same time you could probably build a repeatable system by identifying good areas where he comes into the market with his bullish stance and looking for a short-term trend reversal, and playing the opposite side of that as well. I'm not really looking for, like I said, I think I've shorted 2 times in the last 2 weeks, and I was public about them, and I said, you know what I'm doing? I'm taking a short here. It's a hedge. It's not a short. There's no way that I would take a short that is even close to the amount of my capital that I have long right now. So I am overly exposed long right now. I don't mean overly exposed like negligent, but I am structurally long Bitcoin in all ways. Okay, I am more often than not in some form of perpetual swap position, and I am definitely structurally long with regards to spot. And I've been that way, and my cost basis at this point is well beyond us. Bitcoin could drop all the way down to 11.5, and I wouldn't even miss a beat. Okay. It wouldn't bother me whatsoever. So with my spot positions, I don't really care too much about how much they move. I think that greater context has changed now, and I know that Bitcoin is a very volatile trend. So the only thing that could really take me out of my big spot positions is something that is maybe 3 to 4 times what is the normal anticipated volatility for the trend. So that would have to be a knockdown top or some type of blow off top that has retraced and retaken back really important structural levels that we built on the way up for me to consider it, right? Because at this point, my belief in Bitcoin is, for my spot positions, it's primarily driven on fundamental factors. It's primarily driven on built on the fact that I think there's a major growth driver at play. It's not based on, it is fortified and substantiated by the technicals, as I always say, major contextual levels breaking in market structure. That's a really important thing to pay attention to. Stanley Druckenmiller, big technical trader, big technical macro trader. Of course, he has a thesis on interest rates and inflation and the dollar, but he's a big technical trader, and that's the whole point of. And Sue said this recently too. He said, old money. They might not be into the market before the all-time high, but they cannot be out of the market after the all-time high. So after major structural changes, it signifies that major things underlying have changed, and typically you'll see trend continuation for a while. So I'm not looking. My point was, when I was trying to get back to this, you guys that know how I speak in ellipses. When BK came out and said something about Bitcoin being very bullish, I didn't immediately start to think, let me look for a short-term trend reversal trade in the opposite direction. But if you want to start using that, backtest this. Okay, go back to every single time that he has ever said something about Bitcoin and look at what has transpired for, let's say, start with a 24-hour period after. Okay, and I'm thinking you're going to get some good results with some mean reverting opportunities right there, to say the least. And yeah, you could build systems off of that. As silly as that sounds, you could build some type of approach off of that. Any kind of data that you can acquire and model. If you're thinking that it has some merit, backtest it. That's what you should be doing with all of your trading either way. Okay, aside from that, today the market's moving up. Bitcoin kind of lagging. So we have, you can see BTC here right now, and this is based on market open for traditional markets, cash session. But BTC down 53 basis points, so down basically 0.5%. The S&P up 1%. Okay, the DAC up 0.5%. So typically, the DAC is going to be your higher beta. So right now, after we could see, we'll just go to specifically the ES chart. We had a big kickback after the Pfizer news. All right, to be expected. Okay, the same idea I said with medical marijuana stocks. Everything had an initial move up when Biden was. It was obviously solidified that Biden is president-elect, and this is because medical marijuana stocks are going to respond positively to a Democrat in office. Basically, that whole White House in general. It'll be helpful towards any kind of cannabis company, medical marijuana related company. So these are suddenly longer term plays. And I know people got into position right away in some of these medical marijuana plays. And I talked about the other day, we were looking at one, here it is, Canopy. We were looking at Aurora. And these have gone on to retrace their original pumps, some of them actually. But the play with this now, if there is a Democrat in office, and in particular this party, the play for this is now long term. It's not short term. So you don't just get on in a play now because this is changing on the political front and could spell a positive future for these companies. You don't just get in anticipating that this week is going to be phenomenal. You get in thinking that the next few years could be very fruitful for these companies. And it's at that point it's still a picker's market. But the S&P in the last few days since the Pfizer news, same sort of thing. Market has an overreaction. Okay, markets are mean reverting. They have an overreaction. They're rubber band. All right, they have an overreaction in one direction, and they exert themselves in the opposite direction, and then you fall into some hopefully some stronger long-term trend that ends up resuming. So this is the initial pump. This is the initial response. You have a lot of activity initially, and then market retraces, profit taking. You can see the Pfizer CEO. I think he sold $6 million worth of shares, which is really kind of just a drop in a bucket. But of course, everyone puts it front and center on their on their ticker tape, right? It's the most important thing. It's a scandal almost. It's that's just, you're gonna, the same way when Bezos sells shares of Amazon. These guys are gonna sell their own shares. Okay. We're all trying to do the same thing to one degree or another. And for those of us that are in the public spotlight, it is dangerous to be a human in that sense, right? To try to take care of yourself, because there's always some type of motive, or it's seen as, it's almost seen as something that's evil. So traditional markets today, okay, looking at, ultimately the ES is the S&P. So we'll stick with the S&P. Decent day so far, only up 1%. Bitcoin doing its own thing for the last few days. So if Bitcoin was doing its own thing as the dollar was moving up, Bitcoin doing its own thing as the S&P moves sideways right now. And I think we're in a kind of Bitcoin's doing its own thing mode. So I'm going to look at BTC, and then we're going to take a look at the charts that you guys want to look at. There is some what's it called? There is some plays that are taking place within. So you can see right now, I shared a chart this morning. This is the Crypto Watch platform. So for those of you that were curious as to what we were looking at on my Twitter page, I use Crypto Watch. It's a really good platform. It's very smooth. So I could pull up. So this is something that's publicly available, and I'm sure you guys are familiar with Crypto Watch because it was a web-based platform for a while and it's connected to Kraken. But for all of this, I could pull up, let's say, Wi-Fi, and I want to change this around as many times as I want. So we'll make this let's have this as a tick chart. So for Wi-Fi, and Wi-Fi it pulls up everything. This is an awesome platform. So here's our tick chart for Wi-Fi now. I could configure this as many different ways as I want. These are the positions that I am currently in. I got out of Wi-Fi, got back in Wi-Fi, but I am currently long SNX, long Wi-Fi, and long Aave. All right, and obviously long Bitcoin and ETH as well. But right now we're seeing a bounce across the board with the stronger blue chip DeFi pairs, which I think is, it's a very positive sign that, when Bitcoin is moving down, you're immediately seeing a response in these pairs. So all of you are likely familiar with the sort of relationships that exist now as we move through cycles, and how flows from Bitcoin go into alts, and then flows from alts go back into Bitcoin. It's sort of like it goes from Bitcoin to high, mega caps to, I say mega caps as if that's a common phrase in crypto, but maybe one day it will, to the mid caps, to the small caps, and then the cycle continues, right? Usually washes back out through Bitcoin. But as we've seen, there are more fiat on-ramps. That becomes a little bit more murky and I guess a little bit less clear. Whereas when it was mostly BTC as the conduit, BTC was the thing that you went in through and that you went out through. Now, again, it's become a little bit more murky. But what you're seeing right now is that, so one of the things that I want to see if I want to look for pairs, so I've went over this before, what is my sign to use to recognize whether or not the market is strong enough for me to speculate on alts? So you need to know where the narrative is going. So that is one thing, absolutely. So skate where the puck is going. Okay, keep your eyes on the ball. You've heard this many times before. Keep yourself in tune to where the flows are moving within the market. So you might not have a strong opinion on Aave, or you might not have a strong opinion on Link or Wi-Fi or SNX or Rune or any of these pairs, but everyone else does. And everyone else together moves the market, okay? When you're seeing that BTC dominance is going down, okay, ETH BTC is going up, all right, ETH is maintaining strength against BTC. So not just ETH USD, ETH BTC. So we're looking at ETH compared to Bitcoin. So ETH is sort of like the DAC, I would say, right? People call ETH the S&P. You could refer to maybe ETH as the S&P in this case, and your blue chip DeFis are, their Facebook, their Amazon, they are. It's hard to conceptualize this because ETH is a single asset too, and the S&P is an index it's a basket of assets. But ETH is your benchmark, okay? When ETH is performing strong against BTC, and you can see that Bitcoin dominance is dropping, right? And you're seeing that, essentially capital is moving out of Bitcoin and going to other areas of the market. And then you have these pairs that are all moving up against BTC. It's showing you that right now there is a healthy flow between these assets, okay? So what I look for immediately is I look for ETH BTC and I look for Bitcoin dominance. Some of the other things that have been helpful now, because they are things that are now available, are the alt perp, are the DeFi perp, and are the, where are we? Alt perp, DeFi perp, and the Uni perp, which for some reason it's probably on my other list. So Uniswap perp. These indexes were created by FTX. So these are essentially a basket of assets and are very useful to use as sort of a higher up view of what's going on, or at least a zoomed out view of what is taking place. And if we we'll go back to the list and make sure we add this to the red so we could stick on that abbreviated list. So if we go to, for example, the DeFi perp, so what are some of the signs, if you're looking at this as an index, that this is showing strength? My most important thing is structure, so higher time frame structure. It's telling a very clear story. When higher time frame structure, when bears are in control, you're making a series of lower lows and lower highs. You're spending most of your time below the 20-period moving average. You're probably spending most of your time below something like a monthly VWAP or a quarterly VWAP, and this is just showing you that most of the risk was put on above and that buyers are not in control anymore. If the risk is put on above you and you're a buyer, right? If you bought high and then now price is lower, then you're screwed, right? So if we look at something like the 20 period, so we're going to talk about this as if this is the sort of barometer or the pulse for the rest of DeFi. We use this as a proxy to determine whether or not the market is healthy enough to step into. And we're not talking about, your speculative play that is maybe a 10x a few months from now. We're talking about, is there a rising tide right now? So we'll look at the index, so the DeFi index perpetual futures. We know that Bitcoin dominance is moving down. We know that ETH BTC is moving up, so we know we have those tailwinds right now. So now we'll look at DeFi index perpetual futures, 20-period moving average on it. Okay, let's put the weekly on because there's not enough actual time on that. So 20-period moving average back above on the daily, great sign. Okay, center Bollinger Band. All right, so your 20-period moving average is the center Bollinger Band. All right, so you see how that just matched up? It's the center line. And then your line to the top, line to the bottom, that's just 1.5 to 2 standard deviations above that. So typically we'll see in a bullish market, in Bitcoin, for example, it'll spend in a bull market the entire time at the top side of that channel. So if we look at BTC, you can see it's just favoring the top side of this channel. Now, more often than not, your buying opportunities are going to be back at this 20 period. So if we're looking at the daily channel right now, you'll see that we're well extended from it. Now, some traders will try to anticipate that a correction is near because we've been extended at the top side of this channel, and they'll look to take a play with signs of weakness up here back down to the center. Either way, not going to get into any Bollinger Band strategies right now. Some people use them for options. Some people use them for mean reverting trading in ranges. We're talking about the 20 period. We're above the 20 period. Okay, so above the 20 period, bulls are in control. You could look at something. I like to look at things that actually incorporate volume, right? I want to know where money is actually being transacted. My long is actually looking really good right now. So I got in my Bitcoin long at, I think it was around 1645 or 16, between 1645, 47 on my personal account. So that is, I posted that on Twitter. I didn't realize that the market is just crushing upward right now. And I'll get into why I took that trade in a second. So we're looking at, where is it? Did I change my, oh, what's going on? Where is the VWAP? I might have deleted something by accident. That's a pain in the ass. Let's put a VWAP on. So let's go to indicators, multi-session, multi-time frame VWAP. Hopefully this is one. This is not the one that I want to look at, really. Let's get rid of all this stuff. Leave the monthly VWAP on. This should be good because it's a long enough amount of time. I think I might have X'd one. I might have X'd out an indicator by accident. And I wish there was a select all button for this. So the previous one is good, actually. Previous VWAP. So previous yearly, no, we want to use, I'd rather use previous weekly and then the monthly. So previous weekly and monthly. Here we go. So previous VWAP weekly. No, right here. That's one standard. Okay. All right. Let's change this color up. Bear with me, guys. Line. And then VWAP of the monthly. And then we'll make that a line too. And then we like thin lines because, all right. So here are your VWAPs. Okay. So volume weighted average price. Okay. Think of it like a moving average that's substantiated by activity. Okay. A moving average is based on one of, or combination, depending on the way you have it set up, of 4 data points. Okay, so a candlestick is 4 data points: open, high, low, close. So a moving average typically is going to be based on the close. All right, so it's just a, if it's a SMA, if it's an MA, it's an arithmetic mean. It just means that it's a weighted average of that period. If it's an EMA, it actually takes in, it weighs the more recent price action more heavily to weigh more recent information over, longer dated information. So this takes into account where most of the buying and selling took place, where most of the volume took place. So I always talk about this as where risk was put on. Okay, so if you had an equal amount of buying and selling in an area and it was above you, okay, then the buyers from that area are clearly in worse position than the sellers. All right, sellers are in control. So once we start to close back over the VWAPs, so which are, you could see them, ideally you could see them, yeah, the resolution's fine. I don't know why I was saying that. When you start closing back above your weekly, and for alts I say weekly and monthly because there's only a limited amount of price history, and these things do trend for a good amount of time once they pick up steam in both directions. So for the entirety of September, October, trending south. All right, so using something like a previous weekly so that it's not all muddied up by local price action or local activity gives you an idea of where you sit within the spectrum of recent history. So previous weekly for me, I like previous weekly, I like monthly when it comes to alts. Some people, they'll trade it more higher frequently, they'll trade it with a bit more frequency, and they might apply like a daily VWAP to alts. I don't think it's necessarily a good idea. Or a previous day you can use if you're really short-term trading. I think a previous day is good for BTC. But what I'm pointing out is that this chart right now, which is an index, DeFi perpetual index, what it's showing us in more ways than one is that buyers are now regaining control, okay? That the trend is beginning to flush out, and this almost looks like a capitulatory sell-off into this low. So let's get rid of this and just look at this from a structural standpoint. So you have multiple lows right here, okay? You see that each one of these is losing slight momentum, all right? So losing a little bit of momentum on the way down, but failing to make new highs. So it is bearish. It's consolidating at support. And then you finally get this flush. And just kind of conceptualize this for a second as though that the market was really pushing hard to move itself in this direction. This was acting as support, and it finally gave way. And what do you have immediately? Instead of continuing, right? You might look at it maybe like it could have been a measured move, right? This is the initial move down. Here's the consolidation. Instead of continuing for a measured move of this, so much further down, the market rather finds support immediately under where it last built support. So it's not that far. In this case, we're looking at a 20% drop. This was higher time frame support. So it's coming into an important level in terms of price history. So it's the only history you have. But the market did not continue to trend down. You immediately saw signs of reversal when you reclaim a prior level. So if the narrative is weakness, and this is going to be a continuation pattern, it should continue, right? It shouldn't just be able to immediately reclaim a level that was, just imagine this was a level that was fought over, okay? This is balance, temporary agreement, but with a prevailing bearish trend because it's making lower highs, right? Finally, bears are able to gain the upper hand, push this through this level, and what happens? The market crashes through the level and rips back up. Now, it rips back up because it found higher time frame demand at that level, and so there's an imbalance. Okay, so we went from balance to impulse to an imbalance back to an area where we were within agreement. It was bearish because you had a series of, let me use my hotkeys to get rid of the drawings. You had a series of lower highs technically, but it was relatively balanced within this area. Okay, meaning that it was kind of a short-term range, right? So once the market gains that level again, we just typically look right back up to the highs. Okay, now this is the index, and I'm using this either way. We're looking at this as a proxy or a barometer for whether or not we are willing to get in some of the larger mega caps, blue chips, whatever kind of jargon it ends up assuming, because there's really nothing in the sand with regards to crypto yet. So the large cap DeFi pairs. But the first thing, okay, you could go through all of those things that I just went over. So you want to use a 20 period VWAP, you want to use on the daily, right? It's got a higher time frame chart, use it on the weekly. You want to use a previous week, a monthly VWAP. I think that the most important thing for me, no matter what, bar none, is the actual structure. So when I start to see those things, that's great. So let's just an example of how I actually will look at an alt. Okay, I typically will have an idea of when we're back above the 20 period. It's not that I have an idea of where the 20 period is, like I could just know where it is, but my point is you could start to see when the market has been continuously trending downward and it's beginning to shift, right? So we're back above the 20 period moving average on the daily, and we've reclaimed previous areas within market structure. And where have we more recently treated as support successfully? This high. So just look at previous structures that you made on the way down, and all you're looking for is the signs of strength, right? Which would be price reclaiming those levels. So if you were just on your way down, making any structure that looked bearish, right? Series of lower highs, lower lows. Well, where would it start to change the story? It would start right here, right? So it would start right there. It would start above this level. Okay, bullish would be reclaiming this level as a whole. So the first level that you put in on your way down, and then it leaves you with a structure like that. And this is just a gross sort of, oversimplification of what you need to look for, but this is the pattern that you end up seeing, right? This is the same thing as your swing failure, okay? The market is making a series of, lower lows and lower highs. Finally, the market makes, let's say, a significant low, all right? So this is your last significant low, attempts to make a lower low, and then instead of continuing, is back above that. So just think about it as, it's a tug of war, right? It's a tug of war, and at this point, sellers are just supposed to exert their pressure downward. Buyers are trying to exert their pressure upward, and ultimately, when you reclaim a previous level, it's telling you that things have shifted. And this is, in crypto, it is something that is almost just like that it's that simple, okay? And it starts that simple because in crypto, people are in these low float thin assets, and they are not exactly that thin, but they're thinner than traditional assets. People are basing their decisions off of this. And it's almost like if you're the first one who's willing to step in the way of the retracement at the level, then you shall be rewarded. And the market, once it starts to identify that these patterns are there, gets behind it. And you have these momentum trades. You have these short-term sort of self-fulfilling plays off of these technical levels. And it's a matter of you scrolling through your charts and marking them up and saying, okay, when we reclaim this daily level, when you reclaim this weekly level, I'm going to just know that typically the herd comes after the level is reclaimed. Context has to be important too, right? Context first and foremost. So right now we're in clearly a very bullish context. So that is, if I'm looking at alts, I need to see that my main pairs are beginning to do things like that. And sure enough, that was, you're seeing this in Rune. So we went over Rune the other day. So Rune was in a higher time frame range, clear area of balance between these levels. You're looking for acceptance outside of this balance. So if we're putting on, let me get rid of this. So this was something we went over in the live stream the other day. So if we're putting on something like a fixed range that occurred within this range, all right, here's your value area high, value area low. Okay, so you get the breakthrough. You want to see that the top side of this area holds as a retest. Okay, are there any levels that are confluent with this value area that are technical levels that traders that are not using some profile like this are privy to? Of course, that's why weekly levels are so important. So if we go out to the weekly, you see where your more recent weekly levels are. So we'll just eliminate everything on this chart to mark it up clean. So we're going to mark out the weekly levels. So here's your weekly high, weekly lower high, weekly low, weekly lower low. All right, you see this is not perfectly touching. I don't have the magnet on, but we'll move it up. Let's make them perfect. So just to make sure we're starting everyone off on the right foot. So low, series of lower high, lower low, lower high, lower low. So the story changes once you start reclaiming previous levels. So now that we have those levels on, the story began to change right here. Okay? And look how perfect they retest these levels. It's because it is very self-fulfilling. Higher time frame market structure, don't mess with it. Okay? Don't fade it, because no one else is going to fade it. Only an idiot is going to be fading it in the long term if you start to see that you initially break over the level. All right, that doesn't mean you just long from there, because that could be a wick. Okay, what it means is you look for the return and the support, right? So once you start to see that we found support there, then maybe at that point you consider getting long. But now we are almost above all of these weekly levels. We're back above the more recent one. So this high right here is not the first one that we would be looking to. Okay, so let's get rid of this. The first one we would be looking to is the most recent one that we put in. So this one right here. Let me change my ink color. Let's make it pink, right? Okay. So we'll just get rid of these. You want to see that this level is reclaimed, the type of response we have there, and that is the daily candle off of that level. So it's just telling you how bullish it is, right? This is just telling you that it is respecting higher time frame market structure. This wind in the sails of ETH BTC, I think that, as long as we continue to see this back and forth, there's no real reason to be bearish on these things yet. I think all they're showing you is tremendous strength. It could chop around here, right? It could chop around here, but, as far as this trend, look at this response off of this weekly level. And if this doesn't instill in you the feeling that you really need to master marking out weekly levels on alts, I don't know what will, but this is primarily the thing that drives my opinion on alts. Other people will get involved in alts based on fundamentals, and I get it, whatever, it doesn't matter. That's great. Some stories are awesome, some narratives are so romantic, but you have to realize every team is going to try to create the most romantic narrative. So in that sense, it's like, who is the most creative and eloquent or articulate? Because at that point, they could just garner all the attention. What will tell you the story in a very thin asset is when it's done selling off, right? What tells you that it's done selling off, or that it might be done selling off? When it starts getting bought up more than it gets sold. And I know that sounds overly simplistic, but that's just, markets move up by more buyers than sellers, and markets move down when there are more sellers than buyers. And it's a matter of more aggressive buyers versus more aggressive sellers. So the first thing that I need to see, because I know that it just increases the probability in my favor that much more, is that weekly structure is reclaimed. If you have a really low time frame chart, meaning if you're in something that's just new, you don't have a weekly, you got to go to the daily, right? You have to see a sign of strength in terms of higher time frame market structure. So the more you zoom in, the less likely you are to succeed at this, because you're going to be so focused and myopic on what's occurring in these candles, right? This can all just eventually, print a doji, but if you're zoomed in on a 5-minute time frame, it looks like a very strong trend. Okay, So let's look at BTC real quick, and then I'll go right to your questions and your charts, what you want to take a look at. So my reasoning for getting involved in BTC. So in that more recent, I should be out of it now. If we just reclaim the center of this, I should be out. Consider my take profit was, I think my take profit has already been hit. But so if this moves up without me, that's fine. I'm still exposed to spot. It was just a scalp. But what we were looking at ultimately was we have 2 trending days outside of this composite. Okay, the market is not showing any signs that it's really getting overextended. So what I look for in terms of the market getting overextended is when we're starting to see on the higher time frame that futures are trading at a premium to the spot. We're just not seeing that yet. You know, if I pull up just one of my templates, pull up this one, just paying attention to Coinbase and paying attention to MEX, you can see right now that Coinbase is trading at this is a $10 premium to MEX. MEX is still a very good exchange to go for. It is my priority exchange with Bybit to look at futures, to perpetual swaps. So Coinbase is trading at a premium, right? $3 premium right now. Sometimes it's a $10 premium. This is showing you spot strength, okay? This is showing you actual demand, right? So until I start to see that there is a major discrepancy, right, and the index price is really below the futures prices, I'm not going to really start to get bearish or assume that maybe we're due for a longer term correction. We still have a decently high open interest, and for the most part on this trend up, if we just zoom out, so this doesn't answer why I got long a second ago, but we'll get right into that. It was just a mean reversion play for some trapped shorters. This entire move up, okay, get it so it's zoomed properly. Just want to pull that. There we go. All right, so for this move up, what you're seeing right here is that although we were making higher lows, we had more aggressive selling than we actually had more aggressive buying in the structure. So I'm not looking at this as a sign that buyers are not interested anymore. What I am thinking is that as this is moving up, this aggressive selling has been absorbed by the book that is walking up with this. And you could see this in the footprint on the way up. There were plenty of, so zoom out, there's plenty of indication that as we were coming up that the bid was following. So it's hard to tell now on the 30-minute chart because it's less relevant. But as we were moving up, there was a ton of bid, or there was in terms of stepping in front of this selling, right? If you're looking at this on the chart as we were going up, it's more obvious. Maybe if I hit the 5-minute right here, and then this will keep that spot. I think it keeps the spot. Otherwise, we got to constantly look for where we were. So that buyers were, willing to continue walking up with this. All right, so you have buyers just absorbing all of this activity, right? No real kickback in terms of what sellers are able to do and continue at the highs, right? So what you want to normally see at the highs is that this volume on the left-hand side is beginning to exhaust. And you're not really getting that for the entirety of this trend. So what we saw is that for this structure on the way up, we're maintaining VWAP. You have aggressive selling that's coming in more than aggressive buying, and the bid is just continually walking up with this and sort of providing that support. So for the open interest that we saw increasing, my guess is that a lot of that is actually due to people that are just stepping in front of this, getting short, as if you could just walk into the perfect short like that. And I don't think that that is the case. So we have bid support still. Bid support would look like if we didn't have bid support, when you see that aggressive selling coming in, so when you see this kind of selling on the left-hand side, you would have a market that is responding in a very violent fashion. All right, the market would be moving down rather than continuously up. So it's just an individual candle bar. So if we look at, for example, you could see that there are a few cases within here. So these 2 candles right here, you have a negative delta, right? So you have a negative delta in this case. It's slightly negative compared to the overall volume. But you have a negative delta, but you have green candles. So what that says is there's actually more aggressive sellers in this, but the buyers were able to bid it up continuously. So you just have book support, right? You just have, when I say book, I mean the actual bid support. So I think that I don't think we're there yet. I don't think we've had the blow off top yet. I don't think the interim top is in yet. I think we just have a little bit of mean reversion. The trade I took before was just because we started getting heavy selling into this pocket. All right, so zoom in. So the problem with this chart is this scaling, which is a pain in the ass. All right, so I got long right over here. Okay, so we actually ended up having a spike below. This is even better. So what we see is a ton of aggressive selling below here. What I was looking for initially was price to move right back above this aggressive selling. So you see that this is a negative 14 million delta, very high in terms of volume. So look at the volume preceding it, 5, 2.5, 2.4, 3, 4, 9, and then bang, a multiple of almost 3 to 4 times that value. A ton of aggressive selling and a ton of trades taken. So I also have the number of trades taken. So you see there's a lot of activity in that candle. So normally what happens is that type of activity comes in, you establish those norms, you get that aggressive selling, and you get that trap seller opportunity. We had another spike of the low, right? Again, multiples volume. So ended up substantiating this even more. My fill was just not as optimal because we did get the move slightly lower. So I just was looking for what I thought was, a market that is looking for the short opportunity, and I don't think that we've taken out the high yet. And if you look at, this is a recent target. So this is your target right here. So you have a poor high right up there. So we have a poor high right up there. We have the value area right there. So I think the market, I don't think the market is, I don't think it's coming down yet, right? I think that we still have some ways to go further up and looking to take advantage of those opportunities where we have a ton of aggressiveness come into a low. So all this is right here is your swing failure almost, but in a range, right? So you have a low that's established, price is respecting this level. You're establishing norms down here. Let's say you have a volume of, just generalize it, 1 million, 1 million, 1 million, and then, 1, and then bang. And then you see this is 5, okay? I got in a little early, but this is an opportunity right here. Once you trade back above the level, you see that there's multiples in terms of selling. All right, you can look at a volume histogram if you want to look at this too, a spike in volume. Once you're back above that, all of these sellers that occurred down here, or took place, or excuse me, got into position, all of these sellers are trapped now. And I immediately try to lean on them. All right, I'm looking at a few other things as well. We won't really give away the entire house, but I'm trying to lean on them and have them spit up their positions. Okay, let's look at your questions now, because I want to take charts. That's what I want to do. I want to take some charts. Let's get the agger up. All right. Hello, everybody. If I didn't say hi to everyone already, what's up, fellas? All right. Can you talk about BlockRoots? Will I be able to develop a trading system? Do you teach scalping? So BlockRoots, we'll get into that. I'm just going to go through all the questions right now. BlockRoots is, so if you go to BlockRoots, you sign up to BlockRoots, it's only $49 a month. It is literally the most, I think, the most valuable trading platform there is right now. In terms of what I see out there, I have peers that have platforms that are, $200 a month and whatnot. We put together a ton of videos that are essentially suitable for anyone to walk into and pick up from. So we have, for your brand new trader who has no idea what they're doing, wants to learn a little bit about moving averages, wants to learn a little bit about position sizing, wants to learn, and it doesn't have to be a little bit, right? If they want to learn the nuts and bolts of these things. All of these are folders with videos in them. My bread and butter, my bread and butter, right? My blood, sweat, and tears, my bread and butter. Mine is order flow and market profile trading. So trading with flow. And this is an entire course on that. Now, this is a course on a subject that is very complex. Everything that you're going to be doing in trading ultimately comes down to you sitting in front of the chart and obsessing over watching price action and the actual activity that's taking place. This just provides a framework, okay? The whole concept of you can, you could, what's the concept of, teach a man to fish, versus providing him fish, or you could bring a horse to water. No, I'm trying to think of, you could bring a horse to water, but you can't make him drink. But I was also thinking of the common phrase about teaching a man to fish. So this is the framework. We provide the entire framework of the things that I talk about most frequently. So what I think of is the roadmaps are for everybody. And primarily, if you go through the roadmaps, which are over, I think we have over 150 hours worth of video now, or 150 videos. If you go through these, it's going to help you keep up with the conversation with what goes on in the community. Because again, it is primarily with regards to trading Bitcoin, it is order flow and market profile driven. But all of the things that we go over are things that have practical application. The actual concepts or theories of them, they transfer to every single asset class. So this is for, you know, your beginner trader. It's for your advanced trader. It's I think we've built something for everybody. So we have the roadmaps, and then we have the community, which is ultimately that's just our Discord that we created recently because we had a different community before this. We have just now set up a trading bot. So this is right now being worked on again because the position sizes it was giving, or the the price it was giving was like, I think they're just running tests on it right now. One of the developers. Yeah, there's so many tests on this right now for zero. This ultimately is going to show. So when I go through live streams and I'm, you know, trying to teach a concept or taking trades during the live streams, this is, if anyone is not there, if anyone is not keeping up, this is showing the trades lagged by 5 to 10 minutes. I think it's 5 minutes. So it'll, you know, if I'm talking about something and if someone misses what I'm talking about and they want to see if I got into position, they could, you know, check that. And it's connected to the BlockRoots trading account that I set up on Phemex. Phemex, those are our partners. So yeah, this is a complete package. If you want to check it out, again, it's only $49 a month. It's kind of, I think it's very underpriced. Very underpriced, which brings me to a point of, I was going to talk about growth in value stocks. But right now, this is, if you're looking at this, this is a value stock, right? So it's a value stock right now. It is trading below its book value. Okay. Let's see. All right. Where I'm like missing the chat now. One sec. Get rid of that. I definitely have to be out of that trade by now. Catching up. One sec. All right. Okay. All right. There we go. So your question was, are you going to be able to build a system? Yeah, I think that we give you the nuts and bolts to start building a system. Every market is nuanced, though, so you have to, ultimately, it's going to be the little things that you pick up on by actually trading. All right. Especially Ecuador. No, I don't see what your question is. Finally catching a live one. Oh, because you're, yes, okay. Any chance link dumps to 10ish? When to invest in Wi-Fi? Please explain why you're interested in Wi-Fi. Any chance link dumps to 10ish? Yeah, there's always a chance, right? And I'm, you know how I am now. I am sort of unforgiving with questions like that. You know, is there a chance this happens? Of course there's a chance. There's a non-zero chance of anything happening. So link back to 10, I don't think would be the most concerning thing because technically speaking, this level right here, so if we look at this daily level right there, let me get rid of some of these levels just so I clean up the chart. Get rid of the moving average. So again, sign of strength though, back above that 20 period, holding the 20, but we'll get rid of that. Moving averages are extremely valuable. Okay. Let's see, weekly, here we go. So weekly level is back here. So if we look at, I want to put that line back on. That was that black line I accidentally got rid of. So 1081 down to 1061. That is a area that's an area that has confluence for a weekly and a daily level. So it's absolutely possible that it comes back down there. This is clearly higher time frame resistance right now. That daily cluster going back to 1281. Excuse me, going back to the beginning of September, but at 1281. I think that Link ultimately follows the rest of the market. So Link is your high beta play on BTC and ETH, showing strength. There's no reason to expect it to have a major correction yet. Could it come back down to 10? Absolutely. Would I bet on it if right now the market is continuing to move up that it's going to come back down to 10 before it goes up to 15? No, I wouldn't. But 15 is sort of the area where, again, I said is a good place to maybe manage the trade or take some off because Link is pretty vertical. Right, Link put in a very vertical move, a very big move, and a lot of the times, alts do come all the way back down to the last major area of significance. That was 5. I think that this is good enough, all the way down to 7, but keeping that in mind always. But I don't know if Link comes down to 10 before it hits up to 15. It just doesn't seem like that is the trend right now for the rest of the market, and again, it is sort of consolidating at this daily level. So it's consolidating at resistance more. I'd almost expect more of this to persist. So this, and if you just look at it from this standpoint, it's, trend lines, you're going to refit and redraw them constantly. And I talk about it all the time. You could take all this chart off and draw trend lines on the chart like this, and you're going to find something that works, right? So, perfect example right here. Let's get rid of this one. Let's get rid of this one. And look, these are 3 trend lines I just drew on without looking at anything, and you could rationalize this. Oh, look, support. Okay, and then this one is, oh, this was support. No, there it is, resistance again. Look, now, so trend lines, my point is I was just going to draw the trend line, and people obsess over whether it's on the wicks or on the candles. Where most of the activity took place, where the turning points took place, is good enough. So you see this kind of loose. All it is it's dynamic support moving up over time. So buyers are willing to bid it up here, slightly higher next time, slightly higher. They're allowing this to retrace less and less each time, which is a bullish market, right? You're getting a more shallow retrace or a consistent rising bid. That being said, this low right here, maybe around 11.5, completely normal at that point. You wouldn't want to lose a prior low though. So the problem with a structure like this that hasn't violated any other previous low, so this low is intact, this low is intact, this one may be slightly tapped, but the problem with this type of stair-step structure is, stairs up, elevator down. That occurs because below each one of these lows, for everyone who got long, so let's say that you didn't get long. Now you're long over here. You're probably saying, I'm going to put my stop below this low, okay? Maybe you move your stop up as price moves up. You didn't get long yet. You see this retest. You might put your stop below here or below here. So what you have is below each one of these lows, you just got a pool liquidity. And it is involuntary selling pressure because it's a bunch of stops, right? And then below this low, you have people that didn't know about this and are thinking, I could get a breakout short there, so they put a market sell there. So if you at any point start violating a previous significant low, you just increase the odds of a cascade happening. This low gets nuked, taps into this low, that low liquidates into this low, and that's why moves happen very fast after you've had sort of that very methodical, sort of even staircase on the way up, and why once it takes out this low, it just nukes all the way down. But I think Link can come back to mid 11 and be completely normal. I would just pay attention to this 10 level. So could it come back to 10? Yes. Would it be terrible? No. If it starts trading below 10, yeah, then you're probably coming back down to around 7. All right. BK is local tops. Yep. Okay, bringing the kids to bed now. All right. I'm going through old stuff, so bear with me, guys. Old chat comments. All right, Spitzen Bella. Spitzen, don't sling Binance on this live stream, you Momo. Friendly heads up, get 50% discount on all trading fees on Binance. Friendly heads up. Binance is the evil empire. All right, let's get rid of you. All right. My house. We don't play. My wife's business phone is ringing. I hear it in another room. It's like so faint. Okay. No, this is Ryan. Hardstyle. EGLD. Elrond. So I think that did someone say something about Wi-Fi? Yeah. You asked about Wi-Fi, Sweet Canary. When to invest in Wi-Fi? I can't tell you that answer. All I can tell you is that Wi-Fi came down to this low against BTC, tapped the low, put in a V-shape reversal so far, came down to a previous cluster. When it found support down there, it nuked it, and now is reclaiming a prior level. And again, if you listen to the beginning, that is my go switch in terms of the opposite direction. All right, everyone sees this now. Market is bullish. This is a momentum trade. That's what it is to me. As long as other people believe in this and you see that the bid is there, I'm in it for that reason. I'm not in Wi-Fi because of the future of finance. I'm not in it for that reason. I'm in it because I think that over the 6 months, in a bull market, the Wi-Fi does whatever it does for whatever positive reason, for whatever positive reason that you want to attach to it. Fundamentally, I think that it moves up from it. It could cure hunger, right? But at this point, people have decided that it's transformational, and that's all it is to me. It's a very long, it's probably a longer term momentum play as long as BTC and ETH are still moving up as well. Okay. EGLD. Let's take a look. EGLD against Bitcoin. I'm always going to look at things against Bitcoin first, because in this market, it doesn't pay to be in things that are really underperforming. So, I mean, if you're looking at this, what does this chart tell you? It tells you that everyone is interested in selling it. No one is interested in buying it. So most of these, when I get questions about charts and I look at them like this, I know that you guys are bag holding this. Or if you're not, you know, you're about to. At least if you're not in it yet, you're in a better position. So if I was, you know, if you put a gun in my head and you said, you have to get into this somewhere and you have to tell me what your thesis would be. So here is higher time frame range down here that took place between August 2019 up until May 2020. That's a higher time frame structure we were in, right? Those lows. So this was your significant high within there. That's on a weekly chart. Very significant, right? So everyone else is going to be looking at that level too. So that is 350. Okay, zoom out onto the daily. We're close. So what would be something that I would want to see if I was looking to long EGLD? Well, if you're paying attention to the beginning, you know it would look something like this. Spike this low. If this is your more recent low in the daily, let's say that we get the spike and this is the last low we made. All right, doing something like that. So spike that low, find support at that low, and start trading above previous levels within structure. What are the previous levels that we have within structure on the daily right now? Right here. So high, low. Okay, so let's say you did this. Spike that weekly. Now you're trading back above a prior low that you put in on the way down. That's a good indication that things might have shifted. Now let's say in this time we, on our way down, make a few different lows, because it's never going to be, you know, that clean. Let's say you move like this, spike that weekly. We have something like this. All right. Reclaim prior structure you made on the way down. At this point, the moving average, because price is moving sideways, has flattened out, and you get something where you're back above the 20, you know, on the daily, and you have strength in microstructure, and then maybe, you know, emphasis on the maybe part. Maybe you have a case for upside. Right now, you don't. Just looking ugly. Okay. Okay. Yeah, bearish divergences get confirmed if you get a breakdown. I went over RSI and those things before. It's completely normal for things to taper off. And, you know, for example, in the RSI, people talk about bearish divergences in RSI. And the only way you don't get a bearish divergence in RSI is if things continue more than they have forever. Okay, so if you have, and someone shared this a while back, they shared the Bitcoin chart back here. I won't say who they were. Pretty popular trader. Shared this RSI right here, and the same concept with an OBV, right? Even though that is using volume, but it's the idea of using something prematurely, not knowing the math behind it, and knowing that, or maybe knowing it, but not considering this in context. So there was this structure moving up, making a series of higher highs, but the RSI in this case had made this lower high right there. It was still in progress, for Christ's sake. And, you know, this was seen as a bearish divergence. Okay. This is a 14-period RSI, standard setting for an RSI. Know what your standard settings are for your indicators. So it's the rolling window that it's incorporating into the math, right? These were 14 days perfectly. Okay. The first day was an impulse candle. The first day is always going to throw an indicator off if it's an oscillator. So threw it off. Overbought right away. Everything under that does not move up straight is only going to print a divergence. So if you don't know that, then you don't know that that's completely normal. You don't need to even look at an RSI at that point. You look at the fact that price impulsed and now is chopping slightly upward. It's showing you that momentum has slowed down. It's like you went from a sprint to running into, so this is, so you know what this is right here? This is price sprinting to the water, and this is price trying to run through the water. This is the, you know, you're at the beach, you run up to the water, you're like a 5-year-old, you run at the water. If you're like me, when you're trying to hop on your board, you run at the water and then you just hit the water. So you hit resistance, you slow down. It doesn't mean you're not going anywhere. So same with OBV. Okay, people look at OBV. OBV is a little bit more useful because it is volume, But in consolidations, in this period, volume will drop off. You want to see buying volume increase, but volume's going to drop off during that period, and hopefully the volume comes in when the level is broken. That's where it counts. So where is the bearish divergence on OBV on this daily chart? So daily what chart? DeFi daily. Okay, let's go back to that. Let's put on the OBV. Let's get rid of the RSI. Let's get rid of everything. Oh, what did I do? All right. So here is your more recent low. Yeah, that's a sign that the volume hasn't done much, right? Until you go to the 4-hour chart. So you're on the daily, right? The problem with looking at something that's new, so on balance volume. So I got to preface this first by saying what I just said a second ago. Know how your indicator is calculated, okay? So your OBV is going back all the way to the beginning, all right? This chart only goes back to July. If you don't have, the same way that I said, remember when we were looking at this chart and I went to put on the weekly and look at the 20 period and you only have that much of the 20 period, you don't have enough data yet to actually register and make the indicator useful. You don't have a 20 period weekly moving average on this yet. Technically, you could start calculating one, but it's not showing in the trading view chart. Just to use that as an oversimplification of that means that it doesn't have enough data, right? If I'm looking at something like this, I'm going to go down to the lower time frames to where I get a better idea, right? So this 4-hour chart right here gives you a much clearer idea, right? Okay, so we're looking at the fact that it hasn't shown a bearish divergence within the time frame that we're actually able to see, right? So there's not enough. If you're looking at this structure right now, I say you have to stop at the daily with things like your moving average. You could look at a weekly, but you don't have a weekly swing point until you go down here, right? So it's all depending on what time frame we're looking at when we're looking at if we're creating the market structure, or if we're even though if you create market structure on a weekly, obviously it's going to show up on your daily chart. You know where that level is. But something like this, the OBV, if you look at this right now on the 4-hour, it's no longer showing the divergence. All right, so if we look at this right here, it looks like a divergence, right? Okay, but it's so limited that you can't see anything useful until you go to the 4-hour and even lower, right? Right here on the 1-hour, you could start to see that maybe there's more of the sign that substantiates that daily, but I don't think that this means anything right now. I think that ultimately with Wi-Fi, you still index futures, whatever it is, because that's the index futures, I think you still just move sideways a little bit more anyway. It doesn't mean that this thing is going to continue to just go straight up. So you're going to see that this is going to be almost, actually no, this is great. So different when it's the index. Keep that in mind too. The index is what we're talking about when we're talking about looking at structure and moving averages. Okay. Where would be your place to long? At the weekly level or at the reclaim of market structure on a lower time frame? For example, that H1 cluster would be a hard place to stop at the weekly level. What's up, Michael? How's it going, man? Good to have you. Crypto Michael is one of the better follows on crypto Twitter. One of the more rational follows. Okay, so Dem. Where would be your place to long at the weekly level or reclaim a market structure on a lower time frame? So it depends on what kind of long we're looking for. So my intraday sort of mechanical trading opportunities are still going to fall within what we're printing with regards to where value is being distributed, or where we're actually accruing value, or where it's being distributed. Right now, so the long opportunity that I took from back here, or rather back into this low, whenever you were sharing, I think it was you and BlockRoots who were sharing the Dalton rule setup, so the 80% rule, their 76% rule, right? If we auction 2 rotations within this prior value area, you would probably cover it, but this is a trending day more than a balanced day within a range. So the target that I had was that naked point of control if we were going to get a downside move. If I'm looking to long in the higher time frame now, so if I'm looking at more positional swing trades, it's tough because I think the market is getting overheated right now. The same can be said, though, that you have to buy higher sometimes in trending markets. So is this, for example, do I think that contextually it is a good place to long up here? No, if I'm being honest, I don't think it's a good place to long up here. I think that we're approaching an area where correction is due. It's just hard to say whether that's going to be at 18, whether that's going to be right here. I don't think that it's right here right now. I think that this rejection of this I think this rejection from down here is obviously painting a picture that we're probably going to come clean up this high. It's unlikely that this market just rolls over under its own weight. So when we have a poor high up here and we don't have any kind of swift response by sellers and we haven't found any kind of supply, I don't think the market's going to roll over under its own weight when it's spot driven. Just becomes a lot less likely. There's no real pain point in spot, the same way there is with any kind of derivative product. So if I was looking to long, let's go to a cleaner chart so I can just show you what levels I'm interested in. Doesn't mean you get them though, right? So let's look at a clean BTC chart. The major, most important contextual levels on this chart right now to me, below us, are between, so considering it's a bullish market and you could get front ran, are now between this level 13. It's not, it's not exactly between, because if we zoom out, that 13.9 level begins this structure. It's not that that structure would normally be something that in terms of priority I would say would hold, but this market right now is very bullish, so it's hard to say. So if we go out to the weekly, it's actually, excuse me, I'm getting stuck in these drawing tools. So this high right here, nope, magnet, doesn't matter. You guys get the idea that it's never a line, it's always a zone. So we have come back to previous highs. So remember the past. We've come back to previous highs. We've violated them. As long as we've held them, they've held in a pretty textbook fashion. It has been loose, right? It was loose on the way up. It should be loose on the way down. As long as we hold 11.9, not worried at all. I said as long as if we came down to 11.5, I wouldn't be tremendously worried. I wouldn't like that. I think in these types of conditions, you want to see that the retraces are shallow. It's just showing that buyers are taking advantage of any opportunity they can. If we start moving down, where I'm going to look for the type of response that might signify a long is setting up is initially back down at the top side of the structure. So 13.9, same level it's been for a while now. So 13.9, 13.8, which is the value area high of that previous structure. So let me go back to my BitMEX chart because it's the reason why. So there we go. So you have initial level below for this high. I don't know if that's the best long opportunity. Going back down here, 13.9, sort of 13.8. It's a previous monthly all-time high that we had broken recently. It's the value area high of the structure, though I do say as a caveat, this is a structure that grinded its way up. It's not a structure that, formed a very solid sideways range. So usually in my experience, these are more prone to getting flushed. So 13.9 could get flushed to 12.5, which is that single print gap down here. That still would set up, I think, a good long opportunity. It's tough, Dem. It's hard to say as a rational person that there are many great areas that you want to get long that are local, right? At the same time, if the market is approaching a precipice where it's about to go on a run, you'll see that you don't really get those big pullbacks, right? The market just runs for weeks. Now, this has already ran now for, we're looking 1, 2, 3, 4, 5, 6 weeks straight. So historically speaking, in terms of local structure, this is approaching, a threshold in terms of norms. But, and I think recency is important, but we have changed we have changed the context of the structure recently by moving to the upside. So maybe you need to go back and reflect on previous legs in bullish trends. So that leaves you with maybe 2 to 3 weeks of sustained upside that you could be looking at. And again, we're not really trading above. I mean, now they're back in line, but you're seeing before that the spot market on these pullbacks is taking the lead. So I don't know if there are any places, Dem, that around here I would say I would feel good getting long. And, that part of your question was where would you place a stop? Where did you say, if you're looking at, would be hard to place a stop at the weekly level. So it matters of what weekly level you're talking about. Are you talking about just a weekly open, or are you talking about a significant level within market structure, this major contextual level down here? Did you market buy in the reclaim of that trap trader setup? What is the entry trigger? Yeah, I market buy. I market bought. A lot of the times in this kind of condition, Dem, my entry triggers are going to become a lot less. There's going to be a lot less criteria, because more often than not, the more criteria you apply to a bullish trend, the more time that you're wasting looking for signs rather than jumping on the very short-term opportunities that present themselves. So again, this all goes back to the concept of, when something is So when something is very valuable, and this trend right now is showing you that Bitcoin to people is it is valuable to them, right? These opportunities to get involved have become quickly bought up. So the longer that you wait, it's sort of like that. If I have something, let's think of I say iPhone, but think about an AP, right? So an Audemars Piguet, Puget, however you pronounce it, AP watch, right? You sell them for 30 grand, they appreciate in value. People know that who own an AP. I own an AP. So if you were to drop that by $5,000, right, $10,000, I would probably buy one immediately. I wouldn't do too much time. I'd probably just make sure it was real, right? But I wouldn't do too much time overthinking it because I know that it's undervalued. So once we lost that low, so once we saw that heavy volume come in back here, I immediately got long thinking that this was going to be the turn. So I got long early, right? Market moved against me. I got long early, but I didn't even put a stop on this right away because I'm looking at a market right now that is getting bid up almost immediately. So you get this aggressiveness into the low. We had a very quick response thereafter. And I was looking at this just being a pocket that got turned right away. It didn't, obviously, but trade worked out regardless. I am also, Dem, a little bit less trigger shy in these types of conditions with the short-term trades. These are not, this trade that I'm taking right here it's a scalp. It's not something that I am putting any kind of ridiculously oversized position behind. That kind of criteria, this kind of evidence doesn't substantiate a bigger position. It's just a very short-term opportunity to get, to lean on these participants because, again, I think people are aggressively selling this high thinking that they're going to capture the turn, and it just does. So I don't think that you're really getting that. I think that this value area high of the previous structure is the first area you look for to act as support, so at 16,185. So the fact that we flushed it, had that volume down there below, I was just looking for that mean reverting opportunity back above. Delta is the difference between aggressive buyers and aggressive sellers. Delta is the difference. You could hear about the delta referred to many things. The delta between any two figures. All right. Can you analyze XRP? XRPP. XRP. I feel bad for all XRP holders. They're just seeing that no longer is there, the chart doesn't. So there is this concept in crypto that, and I know Michael's not actually asking about XRP. There's this chart in crypto that the chart represents all available information. So that is an argument to be made between people who think that markets are efficient or non-efficient, and they're both right? So there's an old joke about, I don't remember if it was a rabbi or something about, someone asking whether or is a genie, who knows? Both people ask, hey, is the market efficient? He says yes. And then the next person asks, is the market efficient? Non-efficient? He says yes. You could both be right. Is this chart representative of all available information? I think that, XRP holders think that it isn't, right? They think, and I'm not saying, my original point of saying this was actually no, charts are not, they are not a reflection of all available information. And yes, people could be indiscriminately selling this and they could be completely incorrect. In this case, I think that the prolonged downtrend, the very high conviction by sellers and buyers in this case to not step in, is an indication of this just falling out of flavor. All of the older pairs are pretty much out of favor, right? DeFi is the new hype cycle, and DeFi has probably gone through, it is going through its own hype cycle. Talk about the Gardner hype cycle, how the charts always outpace the tech, right? The ideas are never as fast as people like when they get involved. So if you get involved now, if you're getting involved in an investment, there's this idea that, your investment is going to turn over in a short period of time rather than what the normal sort of time horizon of an investor would be. So people get tired of being in something, right? And, the Gardner hype cycle is that, you get involved early and, or rather the pace of the asset outpaces the actual progress of the technology. It doesn't catch up yet. There's a whole, there's a cycle of recovery after that. I think that a lot of things have fallen out of favor that are not DeFi now, and they're completely irrelevant. There's thousands of altcoins now that it's a shame they're not delisted because the capital in them should be, I think, better allocated to things that actually, they have a pulse still. But XRP, it just looks like crap. Now, the trader in me knows that this could be an opportunity down here. So down here, excuse me, this higher time frame level, because of the sort of self-fulfilling nature of these higher time frame weekly levels, yeah, if we break this weekly and we see that we have some type of strong reclaim, that probably just sets up a test of this low, right? A short-term momentum play. I don't think the herd is even willing to get behind this anymore, though. So when you reclaim weekly levels, it's that herding behavior that it's as the market begins to slowly disseminate information, not all at once, there is that lag, right? And that lag to respond is what is partially, the cause of momentum. So that weekly level is there, but I think XRP just looks like crap. I think that it goes on to be a pump and dump forever, and I think that people that are in this right now are just deluding themselves. Now that means that it can do things like this over the next few years, and if you need any kind of, I guess, reminder that this can persist, just go look at penny stocks. Go to like a StockTwits forum for dry ships or shipping stocks or things that people actually still think have a future that are just nothing. Okay. Link. Went over Link. So Link. We'll go over Link again, Dave. So I don't know if Dave, you're a little bit later. So Link is, the one thing about Link that I'm a little bit concerned with is that Link Marines are part of that narrative. Viral things in crypto, memes, anything that can become viral can have a massive effect on crypto assets because they're thin with respect to macro assets. They're very technically oriented. They're very technically driven. So we haven't really seen much of this viral presence anymore the way that Link had initially. So I'm wondering if that is a bit exhausted. And again, crypto is very short-term, has really short-term memory. And it is not a faithful partner, right? It's a mistress. So I think that, once something sort of becomes maybe not as enthralling or exciting, the market moves on to the next cool idea, which is DeFi, which is a reminder to always cap your trades at some point. I think personally, I'm all for SNX. I'm all for Aave right now, but it's like all for as long as this and this and this happen still. If the market starts shitting the bed, I'm out of those. I don't care about what the narrative is. I will always until there is I think there are more signs of mainstream adoption. I will first and foremost be a technical trader with altcoins. I'll keep a small bag on as like a VC punt, but that's it. Link right now, I think clearly is showing signs of relative weakness, aside from this more recent price action. Relative weakness with respect to BTC. I think that you get the fleet equality effect as BTC moves to the all-time high. I think that that's going to punish a lot of things. So you don't want to be in the things that are going to get punished more. I think that Link might be one of those. So it's not holding up as well as it previously had. But in terms of where it sits with respect to USD, I said, at 10, that daily and that weekly level down at 10, that's very important. You do have this sort of pace of the bid to follow this up over time, respected or rather indicated by that trend line, diagonal trend line. I don't know. I'm looking at Link, maybe to 15, reevaluate. It looks like it's lost a little bit of its its presence in the market. It's run its course for a little bit, and I thought initially Link was going to have a deeper correction. So, we'll see. Okay. Let's see. More questions, more charts, guys. Right. Based off your experience, how much you've given institution strategy for their BTC holdings? So, their institutions have been in crypto for a really long time. So the idea of institution is, I think it's a broad term, but institutions like Fast Money have been here. There have been some awesome ARB opportunities for anyone who is willing to throw capital at the space. Obviously, it's scalable to a degree because it is a thinner market compared to a lot of traditional assets, but institutions have been in here. The institutions that we want are the long-only institutions, the pension funds, the old money asset managers, and I think we're seeing more of that recently. We're seeing more of that type of adoption, And those type of participants, they don't have concern about what happens on the lower time frames. They don't care to get involved in your ranges. They're, that's, again, this is me just trying to be, exaggerate how they don't give a shit what's occurring on the low time frame. They care about the higher time frame, and if they're getting in a position right now, they have 2, 3, 4, 5 year ideas, okay, to say the least. You're not seeing capital allocators get involved in BTC for a 6-month time horizon, okay? For longer term investment managers, longer term asset managers, long only types, trend followers, you're not seeing them get involved for short term moves. So I think that this also implies that any kind of short term noise is something that we should not necessarily be too concerned with. It's not going to concern people who are getting involved like MicroStrategy. It's not going to concern Jack of Square. It's not going to concern Paul Tudor Jones. It's not going to concern Druckenmiller. And this was the whole idea behind major contextual changes in market structure that I've been getting at for months. So some of your higher time frame macro traders, the all-time high break will bring more people in, but for a lot of people, all we need to do is reclaim major contextual levels in the opposite direction. So just areas that signify that the trend is changing. They're not going to get involved in your lower time frame structure, so they are really only able to scale once certain things occur, or to get involved once certain things occur. And that's why I say, once you break major levels, and this is why I was beating this drum, going back to here, back to these highs, once you break these levels, you bring these participants in. And you're just bringing in a stronger bid than all of the retailers trading against itself for so long. So once these levels change, it doesn't make sense to try to fade them the way that you might fade them in other conditions, in ranging conditions, in more bracketed conditions. I think that as far as the people that are getting involved now, they're getting involved based on macro growth drivers, and I don't think that those are going to be interrupted within the next year or two. Okay. Let's see. So BTC also right now, I believe, has a growth driver. So this was retail. So make no mistake, there's this whole conversation of new retail coming in. Yes, all-time high break in equities, for example, when you have a break of an all-time high, that's a major go signal for a lot of things that, let's say they've been range bound for years. Your higher time frame traders in equities, for example, they'll look at, I think I said, for example, 3 times in the last sentence. They'll look at 3-day charts, weekly charts, quarterly charts, monthly charts. They won't look at, an hourly chart unless they're a shorter term trader. But a major change in that structure, something like an all-time high break, that is something that will probably persist for some time. It's a significant change in the dynamics between buyers and sellers, and a significant change in market structure. This is going to bring in new retail and chase it, but this was the retail-driven part. This is not going to be a retail-driven move, I don't think. I think it's going to help the retail comes in, right? It's going to put eyes on charts more than they already are, but this was retail-driven. This whole move was, what is Bitcoin? I thought that was drug money. What is a Bitcoin? It was brand new to people. This is not going to be the same, right? It's not going to. That's why people who look at search trends, everyone knows what Bitcoin is now. There are a lot of people that still doubt it, right? Maybe that this will provoke them to get into the market. But there's 2 different growth drivers. And I think that you're seeing that this is a lot more macro related now, because there are a lot of these. There's sometimes short-term spurious correlations. They're sometimes short-term, but I don't think that they're spurious. They are, Bitcoin is trading more like a macro asset. It's, in my opinion, more than anything, a higher beta risk on play than it is a store of value yet. Other than it, from a utility standpoint, holding more value than, let's say, what is space for space, the same size of gold. But I think that's obvious. You have a USB-sized stick of BTC on a hard drive that can hold an infinite amount of Bitcoin. So from that store of value standpoint, yes. But in terms of a store of value as far as maintaining its purchasing power, I don't think that is complete yet. That's a cool romantic narrative. Maybe it will be fulfilled in the future. But I think that Bitcoin is it is more of like a risk on asset, like a higher beta play on tech stocks. And I think that you're going to see that those are going to continue to outperform. So yeah, let's see. Not to get too far into the rabbit hole with my opinion on Bitcoin. All right. YFL. Let's look at YFL. LTC, no. LTC, in my opinion, dead. Link, so just when, all right, so here's my opinion with if Bitcoin breaks the all-time high, you have to always say if, right? Bitcoin breaks the all-time high, I'm going to be looking to buy things that people think are going to become future Bitcoins. You know, they look at a Bitcoin, they don't know you could buy part of it. They look at it, they think that's really expensive. This one over here, though, is $5, and it looks like it's going to be the next Bitcoin. I will sort of indiscriminately buy if we break the all-time high and we do have a ton of USD coming onto retail exchanges again or fiat on-ramps. LTC was one of the first things I was getting involved on that same idea that LTC was going to catch up to be like silver to gold parity, but I was uninformed with crypto. LTC was also very useful, Litecoin, excuse me, because it was the fast transfer method at the time. Bitcoin took forever, and if you want to get around to exchange, I use Litecoin. I don't think that there's a captivating reason anymore to be in LTC. So we'll look at it really quickly, but unless you're just trading it from technicals, which is completely normal, a lot of what I do either way. So, but when you guys ask about things, I assume you're asking about longer term, with regard to longer term opinions on it. So this is ranging still, technically, while ETH and BTC all broke their respective more local highs. So I think that that's showing you weakness regardless. Trend change in the making, maybe if we start breaking back above 70, but I just wouldn't hang my hat on LTC. It's sort of like looking at this and seeing that it's the slower kid in the race. The race is now, it's like some of the runners are mile 13 and LTC is still at mile 2, and we're wondering if LTC is going to catch up in the marathon. I think that you kind of extrapolate from this that it's going to underperform, and I don't see any reason why it would change. There are a lot of other alternatives right now that sort of fill the same role. YFL. YFL was a great play the other day. It was sort of like a stat arb play between YFL and the other Wi-Fi pairs, because it was, a lot of the DeFi pairs are correlated. The blue chips, the more popular pairs. So we'll go to YFL. Poloniex has such an ugly chart. But YFL was the one that had not recovered. Forgot, Josh shared this the other day. It was right around here. Everything else had gone on to do this, right? And YFL was still busy around here. And it was just like a very, very, I think, underexposed opportunity that was setting up. And Josh shared it, saying, hey, this is probably going to catch up. And sure enough, it did. I don't know a whole lot about link swap. Josh does, though. So, he always puts out a ton of content on this stuff. From a technical standpoint, right, if we're just looking at, I want to get a better looking chart. It's so ugly. Hold on one sec. So let's just look at daily structure. So in terms of the local trend, keep this in drawing mode. There we go. We've finally broken out of this range we've been in since the beginning of October, right? Now with pairs like this, the structural levels, they are psychological no matter what in most technical driven assets, right? It's a lot of us that are helping fulfill these levels until there is some major flow and interruption to them. With levels in assets that are very thin, they're very easy to break, right? Because it's a thin asset either way. So you're more likely to get overthrows that correct and then don't respect the level. I think that this is significant though, because when I'm playing, so how I would look at this, I'm not in this right now. I would be keeping a close eye on the rest of the pairs that it is correlated to. And I'd be using this as just a proxy, right? If it has been following Wi-Fi, if it has been following YFII, whatever that one is, I would say that these are likely going to remain correlated. And if I was looking at this, I would just be monitoring the level of that correlation, right? As long as it's maintaining a correlation of, let's say 0.6 and above, it's probably around 0.7, 0.8. I think that it's healthy to play these as a proxy for the other. So I don't know too much about YFL. This is the point. I don't know too much about it, but I know it likes to follow the other assets. As long as it's clearing its more local levels in the market structure to the upside, I would say, I'd look to this area. I should rephrase this. I would look to, if I'm not in this right now, which I'm not, or if I'm you, I would look to this area to act as support, but I wouldn't be surprised if it took it out, right? If it sort of violated it a little bit more than maybe you would anticipate a significant level to allow for, but because again, it's not thick, right? There's not a high friction. There's not a lot of friction in this market. It's very thin. So with altcoins, this is almost like this is I don't want to phrase this the wrong way because it'll start making people trade without stops. This is one of the reasons why in altcoins you can't really get away with placing that tight of stops because the markets are very noisy. So what you should do is ideally you should take in certain levels of volatility. So whether the ATR is, let's say in Wi-Fi, the ATR is $150. Well, maybe your stop in Wi-Fi is, I don't know if it's 150. That'd be actually pretty insane. Let's just double check that. So the ATR on Wi-Fi is 44. That's on the 4-hour chart. On the daily, it's a 94. So that's kind of a loose stop, even if you went a multiple of ATR. So you probably should look at a 4-hour chart, and you say something like 2-hour multiple, or a 2 times multiple, the 4-hour ATR below the level, or 1 multiple, just to give price an adequate amount of room to breathe, because you know that it breathes a lot, right? It has a pretty wide range of dispersion. But I think that when I see assets that are correlated, I'm less likely to worry about the individual asset as much as I am the relationship that asset has with the other assets that it's connected to. Hopefully that makes sense. All right. Uni looks good. I know that already. I'll look at Uni. All right. Okay. Let's go to Uni. That's Uniswap Perp. It's a great chart. So first things first, Uni is trading really well against Bitcoin. So bull market, I want to see that I'm at least outperforming BTC. Otherwise, it doesn't make sense to be in something that's underperforming Bitcoin and just going up in USD because everything else is. So Uni right now, if we look at Uni from just a USD structural point, we look at first Uni we'll look at it against BTC. So here's your daily, local levels, more recent swing low within Uni, reclaim that back above the 20, all the things I talked about in the beginning. Looks very solid, right? Great test of this prior level, chopping around, but everything looks good. This is your next area of resistance, I think 24,000 sats. But if you look at this on, so this is clearly, it's performing against BTC, it's performing well. If you look at the daily structure, I marked this one out on the USD chart. Very obvious swing low right here, important level within structure, consolidating. When we lost that, this was where we retested and quickly reclaimed, and we've had a good test above that. So again, alts, they're not going to be clean. So I just want to see that we're trading back above prior levels. If you look at Uni against the 20 period, back above the 20 period, I would like to see some type of consolidation and ultimately some form of a base hold. And as long as the rest of the market is outperforming, I think that you have to imagine that DeFi is the flavor right now, right? DeFi was shared in the public with Bitcoin on CNBC as revolutionary in the financial world, but your blue chips, I think, are going to outperform with Bitcoin, while a lot of some of the other alts, just because. So you might see an alt chart right now that's a really speculative, low volume play, and it might look good, and Bitcoin moving up would probably destroy that. But as a whole, I think that the things that have been outperforming BTC as Bitcoin moves sideways, the large caps, the more popular pairs, I think that they're going to be really good horses to play in this race, as long as Bitcoin continues to move up, right? So if I am coming into crypto for the first time, I want to get involved in what I'm looking at on the headlines, and something like Uniswap, something like Wi-Fi. These things are really popular, and I think that they're going to continue to do well, regardless of what your opinion is on what this is fundamentally, or where it sits with relation to its competitors. It is the chosen. It's one of the chosen assets right now, and a lot of our plays, they come off of that. They come off of narrative. So I don't really personally care what it does as long as other people do. Obviously, we know what Uni is, but you know what I'm saying. If it's some obscure pair and it's moving with a strong trend, and it has the volume to back it, then that's good. All right. But we are, what are we now? We're almost 2 hours into this, guys. So what we're going to do now is we're going to do the random YouTube comment picker for the last video. I don't know where that is. Okay, this was on the 11th. And we're going to pick 2 people from this who are going to win $100. Paste. Get YouTube comments. All right, so first one is going to be, got the comments, got 39 comments. Ready? That's not even a lot. You guys need a second? No, we'll do right now. So first one is going to be, I saw Cornholio's name. D. Ross. Holy shit. D. Ross won 3 times in the last month and a half, I think. Congratulations, D. Ross, man. Listen, no favoritism there. I didn't make this. D. Ross just won. And D. Ross is in this stream. D. Ross has won $300 in the last month and a half from BlockRoots. So, okay, so D. Ross won. Unbelievable. Cool. And D. Ross had a substantial comment too. You know, that's a heartfelt comment. I appreciate that. Appreciate that. So D. Ross just won. Let's pick another one. All right. Too funny. Okay. Got to enter that again. Unreal. But hey, listen. There's merit to this. It's random. It's not, there's no favorites, so. And J.E. So let me screenshot this. I've seen J.E. in here a few times. And yeah, congratulations. So all you have to do is, you know, D. Ross, by now I think I have your Bitcoin address. So I will go ahead and we'll confirm it again with you, though, just in case you switch it around. Yeah. And J.E. So if J.E., if you're watching this, that's great. Send me a message on my Twitter with your account address. If not, I'm going to comment on your comment right now and try to make sure that we could get that $100 to you. All right. There's a reason why we don't denominate the winnings in BTC as the market moves up, because otherwise, years from now, these comments might be worth a lot more than they are right now. But all jokes aside, guys, thank you for joining the stream. I really enjoy doing these streams, and you know, hopefully you guys can take something from this and apply it in your trading, in your investing. Again, none of this is financial advice. It's just the things that help me. If I'm looking at BTC right now, just in terms of more local levels, you know, I do think that I don't think we've put in the high yet. I think we have a tap out ahead of us. So the market is constantly being bid up. There is no sign of absorption yet. So I'm not sure. We're not going to get a sign of absorption that's going to occur on the low time frame. So I don't think that you're going to get something that moves up like this and then we see on CVD do something like this. I think that there is such a demand right now to buy Bitcoin, even though technically now I think is probably not the best time to buy it. I think that we're going to get a tap out, which is essentially, you know, the market's going to move up, take out this high, and then the high that we put in doesn't give you time to short unless you were already positioned and your stop was, you know, an adequate amount of distance away to accompany for that. So things are not ever that easy to where you just walk into a short. And this market especially, I think you're just going to get the tap out where maybe we come up to 18, right? And this is not supposed to be taken precisely. What I'm talking about is the type of price action we have, to where you get the move up, you finally catch demand, and then you're talking about a move down that is like, you know, a K, right? At least $1,000, big red candle. And it sort of puts everyone on their ass for a second and has them start to second guess the trend, or, you know, you might see it resume in terms of confidence. I think that the price action that follows a consolidation is going to be telling regardless. So if we have a tap out, so you have a tap out, you get a big kickback, and we start to form support over here again, then yeah, maybe another long opportunity setting up. I think then I would look for very obvious signs of divergence between CVD and price action. Let's say you have few lows that set up over here. Okay, and then you have a very obvious divergence in delta. Okay, so again, delta, if you're looking at this chart right here, let's say that, for example, it looked something like this. So you have a low, a higher low, but delta is on its way down. So if this was a lower time frame chart, we would say, all right, and you could say this right now too, but it's just we're in an area, right? So the reason why things are not technically a long to me, even though the market, I think, you might be thinking, well, why isn't it a long right now if you think that the market's going to be at 25K? You need to be in an area where you have contextual risk reward, right? Where there's a nice area to define a position. Up here, for higher time frame positions, I don't think that there is a nice area to define your risk, because at any point we're expecting volatility increase. So where are you going to place a stop that protects you for some type of longer term swing position? You know, there is an argument to be made for us returning back down to 3.9, returning back down to 12.5, and that wouldn't change the bullish thesis. So unless you're taking very short-term trades, which again are more mechanical, and that's what I just took before, my short-term trades are going to be dictated by our more local levels. So I'm dealing within these locations now. I am no longer going to be looking to add to a major swing position to the upside. Everything I'm going to be taking is going to be in respect to local levels. So it's naked point of control, value area low, value area high. We have a poor high right now up here. This is a more balanced day. What would be a sign now of a range forming? Well, you have value migration, and maybe we're having value overlap that's going to develop. So if we have a day that opens and we have another value area within this structure, yes, then you have more range-like conditions. You have volatility probably beginning to drop off, going from 122 to 93. Compression, ideally, right? You see the rotation factors beginning to dip. That is just a calculation of how aggressive the market is to one side or the other. It's just more range-bound now, just from these daily features alone. So if we open up tomorrow, let's say that we make a way above this high. Okay, if we open up tomorrow like this, we're back above this high. What I would say is, all right, I would look for this to get cleaned up. If we spike that, here's just a setup that I would take indiscriminately. Spike this high. So we open here, spike that high, and now we rotate one time even back within this prior value area. I'd probably be looking at initially that $100 to $150 rotation between 64 down to 62.50, or 16, excuse me, 250, and then more than likely see mean reverting behavior and value established within this prior range, because you're going from trending to ranging. And I think that we're getting close. We're getting close. Everyone is really confident right now, which is scary. All right, guys, that covers it though. Everyone have a fantastic evening. Thank you for stopping in, and